We are very pleased to have with us Emine Isciel, who will explain how Storebrand, a Norwegian asset manager, has excluded deep sea mining from their investment and what it took them to get there. In terms of housekeeping, just so you know, this webinar is live, as you can tell. This webinar is recorded as well. If you have any question, post them in the chat and we'll answer them during the call. And if not, we will be in touch after the webinar. So I'll start with a brief overview of Planet Tracker. For those new to us, we are a not-for-profit think tank. We produce research on nature-related risks and opportunities. We're part of the Tracker Group, together with Carbon Tracker, which focuses on climate. Our research focuses on the key industries that negatively impact nature. So if you have colleagues working on food systems, plastic, or textiles, please get in touch and we'll be happy to chat. When it comes to deep sea mining, we've produced 6 reports looking at different angles, which I will summarize now. So let's start with climate. A while ago, the major claim of companies that wanted to mine the seabed was that it was more environmentally friendly than existing mining operations. So we reviewed the evidence, and we found that only 3 studies comparing the climate impact of deep sea mining to that of land-based mining. And 2 out of these 3 studies were funded by deep sea mining companies with key methodological issues. The only independent study concludes that the carbon emissions of deep sea mining are broadly similar to that of land-based mining, or could even be higher, depending on the assumptions retained. And importantly, all these papers agreed that the vast majority of GHG emissions comes from the processing, not mining. So reducing the carbon impact of processing is key. There's also the big questions of what happens to carbon sequestration in the ocean if the seabed is disturbed. We spoke to scientists and learned that the amount of carbon disturbed by deep sea mining would be much higher than the carbon sequestered every year in the ocean. However, whether that carbon could make its way back into the atmosphere and after how many years remains unclear. Now, when it comes to impact on biodiversity, it is hard to compare land-based mining and deep sea mining simply because no one has found a good set of metrics to compare 2 completely different units of nature. But what our research did is to give you an order of magnitude of the scale of the impact. We concluded that the volume, not the area, remember we're in the ocean, so we need to think in 3D. So the volume of biosphere that would be affected by the habitat destruction, sediment plume, lights, and noise of deep sea mining would be even greater than that of land-based mining. Of course, one key pushback from the industry is to say that land-based mining results in huge levels of deforestation, and that is true. But when you look at the drivers of that deforestation, the key metals are not those you find in the deep sea. Copper, manganese, nickel, and cobalt mining historically accounted for 12% of mining-related deforestation. Now, to be clear, I do not diminish the urgency of reducing deforestation when it comes to existing mining. The key issue today is nickel in Indonesia, where about 750 square kilometers of forest have been cleared to extract nickel. But what I really want to point is that over 20 years, the total area of forest lost to mine copper, cobalt, nickel, and manganese is smaller than the area of seabed just one company plans to mine in just 1 year. Another key issue is restoration. In many jurisdictions, mining companies are theoretically obliged to rehabilitate or restore mines after use. That means huge financial liabilities because it's very costly and very hard to restore mines. Now, in the seabed, it's even harder. About half of species living in the abyssal plains depend on nodules that deep sea minings want to remove. So restoration is close to impossible. Still, based on experiences conducted by scientists replacing existing nodules with fake nodules, we calculated that attempting to restore the seabed would cost an absolute fortune. Per square kilometer, that cost would be much higher than the revenue generated from mining, so companies could not bear it, and neither would government. Restoring 30% of the area under mining concession in international waters would cost the same as the global defense budget. So needless to say, it won't happen. Now, talking about money, let's look at the financials of deep sea mining. We looked at their key study, I would say, produced by a deep sea mining company, which looks in detail at the vast amount of CapEx and OpEx needed to conduct such an operation. It was published in 2018, so we updated for metal prices and concluded that deep sea mining companies would generate a negative EBIT, even using the assumptions of the industry. And since we published this paper in 2022, I think, 2023, sorry, metal prices have fallen further. What this means from a capital market perspective is that deep sea mining would lead to value destruction of about $30 to $130 billion. First, value destroyed in the deep sea mining industry itself, but also in the fishing sector. For instance, tuna populations in the Pacific are moving towards mining areas or potential mining areas due to climate change. Value destruction also in the terrestrial mining sector. I'll come back to this in a second. And on top of that, of course, and that's key, you have a huge natural capital destruction. In financial terms, we quantify it at the very least, $500 billion, but it's likely to be much more. So in the existing mining sectors, some companies are at potential risk of disruption from deep sea mining, and that's the large ones that operate with high costs. For instance, deep sea mining companies recognize themselves that they would flood the market really with manganese, and that would badly impact companies, for instance, like Eramet. And for that reason, countries that rely on mineral exports would see their public finances being affected. About $560 billion of exports are at risk from deep sea mining, mostly in low-income countries like Mongolia, Zambia, or DRC. Once again, the point is not to defend the industry, the mining industry, which has many crucial issues to deal with, but instead to say that deep sea mining would not solve any of these issues. It would result in additional environmental destruction, financial value destruction, and would make it worse for countless people across the world. Now, would there be at least some benefits for the countries that sponsor mining? Unfortunately, no. On paper, countries would generate royalties and tax from deep sea mining. But we've done some digging, and in reality, these benefits are likely to be insignificant, less than a few $1 million a year for each country. And this is because royalties are subject to a high level of deductions by the ISA, the UN body in charge of regulating deep sea mining. And it's also because tax levels are likely to be very low. For instance, the metals company is sponsored by the government of Nauru, and under that agreement will not pay any corporate tax. Also remember, the industry is likely to operate at a loss, so there would be no profit to tax anyway. So because of all of these reasons, we are engaging with financial institutions and are asking them to do three things. One, support a moratorium on deep sea mining. It's quick and easy, and many companies have done the same already. I'll put the link in the chat later. Two, develop a policy that explicitly commits not to finance or invest in companies or projects involved in deep sea mining. And three, engage with sectors that could use minerals from the deep sea. Plenty of companies already committed to not using them. One of the latest is First Solar. If you're looking for help on this, you will hear how Emine and her team did that, but also do not hesitate to contact us. And be aware that plenty of financial institutions like Standard Chartered, UBS, Deutsche Bank, or of course Storebrand already have anti-deep sea mining policies. Now, enough of me talking, and I'll pass on to Andy, who, like us, is engaging with financial institutions on deep sea mining. Andy, all yours.
Excellent. Thank you very much, Francois, both for the research you've done and for the opportunity to present today. So my organization, the Deep Sea Mining Campaign, works on the likely impacts of deep sea mining on marine ecosystems and human communities. We advocate for caution around deep sea mining while exploring suitable, sustainable alternatives. The organization started in 2011, and I've led our finance work since 2017, producing research and directly engaging with over 300 financiers to date, many of which were in that previous slide that was shown. Our work includes an annually updated list of companies who have interest in deep sea mining to allow for due diligence checks, which was in your most recent report, so thanks for that, as well as a quarterly thematic update aimed at financiers. Okay, next slide. Thanks. So with limited time, I would like to highlight 3 issues that have come up in discussions I've had during that time. The first is that even in a time of increased innovation, there's seldom a point where there's an opportunity to future-proof against a risk involving an entire industry. Yet I think deep sea mining is one of those opportunities, as there's no commercial mining as of yet. And that makes it unlikely that there's going to be any current investment, and therefore it's relatively easy to explore looking at the sorts of policy that François was mentioning, or looking at a call for a moratorium. I would add that reflecting those risks, there's been significant divestment from major corporate players who had an early involvement in the industry, and that includes Maersk and Lockheed Martin. It also includes terrestrial miners such as Anglo American and Glencore, who divested from specific companies, as well as other mining companies, including Rio Tinto and Eramet, who have issued statements rejecting deep sea mining. However, I think that same lack of actual deep sea mining can also be a problem for us, because we've tried to engage with ESG rating agencies, but I think they have trouble assessing the risks of deep sea mining because they're tending to rely on current footprints or past events, whereas the risks are really about the future. So we're exploring with them how their models can be much more forward-looking, but still I think that's an issue. Okay, next slide. Thanks. And I wanted to emphasize really how important I think the issue of insurance is in terms of deep sea mining. And basically, the need for insurance is hard baked into any potential regulations, but also it's a new experimental industry, which I think presents particular concerns and challenges for the insurance industry. Without an actual need for commercial insurance, I think insurers have been relatively slow to consider deep sea mining to date. However, I think that is starting to change. Last year, a number of insurers came up with policies avoiding deep sea mining. That number rose from 0 to 4. And perhaps more importantly, 2 of those were reinsurers. So both Swiss Re and Hanover Re, who are 2 of the 3 world's biggest global reinsurers, created policies. And I think these actions should significantly impact any costs for deep sea mining, given reinsurers are likely to provide critical financial backing for other insurers. Okay, next slide. So then the last point really is to look at any kind of updates, and that's going to be difficult in this brief time, but I wanted to look at 3 particular areas. In the first instance, the International Seabed Authority, or ISA, the body that is mandated to oversee deep sea mining in the international waters, it's had a significant change at the top with the advent of a new Secretary General who started work in January this year. Leticia Carvalho is the first scientist to be elected in the role and is considered to adopt a more neutral position to deep sea mining than her predecessors. She arrives at the ISA at a time where they have a roadmap to complete the regulations in July this year. But I think it's fairly clear from the state of negotiations that's going to be missed. And when they will be ready, that's really open to debate. Second point is that the main company that's pushing to mine in international waters, called the Metals Company, has said that they will apply to mine by the 27th of June this year, regardless of the states of negotiations for those regulations. Although technically that's allowed because of a thing called the 2-year rule, it promises to turn into a very big intergovernmental political fight if they do this, as well as presenting a particular challenge in terms of how they're going to mine given the unfinished state of the regulations. And then my final point is it's worth noting, I think there's been an increased interest recently in mining in countries' exclusive economic zones, or EEZs. So some states, not all, but some are pushing for it, and they include Papua New Guinea, Cook Islands, Norway, China, Japan, and India. I think all are in different states of advancement, all, I think, throw up their own particular potential concerns, and particularly around how they would be regulated, especially if those countries are advancing laws before those international regulations are finished at the ISA. So I think that's all I've got time for. I'm happy to hand over to Emine now, but obviously happy to answer any questions and follow up and individually with anyone who wants to do that. So thanks again.
Thank you, Andy, and I'll just pass on to Emine now. Thank you.
Thank you, François. I'm just going to share my screen. Can you see my screen?
Yes.
Yeah, perfect. So my name is Emine Isciel. I work for Storebrand Asset Management, and we are Norway's largest private asset manager. And I really appreciate the opportunity to talk about the work we have done on deep sea mining. Our journey really started in 2022 with the adoption of our nature policy, which you can see here. It really strengthened the application of the precautionary principle. And following the precautionary principle, Storebrand developed 5 new divestment criteria, and one of them being on deep sea mining, which you can see here on the right, saying that we will not invest in companies involved in deep sea mining until we have scientific knowledge on the impacts of these activities. And this is very much in line with the global moratorium, which Andy mentioned. So we have also signed this, which means an official pause on deep sea mining to allow time to gather more scientific information on deep sea ecosystems. And what we are noticing is that there's a clear and growing opposition to deep sea mining. And you can see that governments, corporates, and more financial institutions have signed the global moratorium. And the reasons for these have been highlighted by both François and Andy. I'm not going to go into the financial risks, the environmental risks, but there is one thing that I really want to underline, and that's the last bullet point that you see here. The narrative that has been out there is that we need these minerals in a green transition. And there has been scientific studies, including from the EU, which have questioned this narrative and underlined that this is uncertain. So I just want to also draw your attention to the demand supply side of this issue, in addition to the financial and environmental risks. So one of the immediate consequences of our nature policy, of course, was the negative screening, the divestment from companies. And as Andy said, there are not many commercial actors, so this is quite easy to do. So we have been quarterly screening our portfolios for pure players, and we divested from TMC, which Andy also mentioned. It's one of the few commercial actors. And WWF, together with Profundo, they have a data portal which you can look into, where they identify pure players, but also non-mining companies and potential users. And one of the long-standing debates within ESG is the discussion whether we should divest or we should engage. If we divest, we're going to lose our ability to influence companies. And what we're doing in Storebrand is that we're combining. We have divested from pure players, and with the rest of the supply chain, where we have significant holdings, we're engaging with them. So we use engagement and divestment together, and we're also engaging with policymakers, because they're, after all, the ones creating the enabling environment for sustainable finance. So I just wanted to also show our expectations for companies that we're engaging with. It's quite clear and concise. We want companies to have policies on deep sea mining. We want them to adopt a precautionary principle and also monitor and track where they source their minerals from. And we want them to support a global moratorium. And then we're also exercising our voting rights at AGMs. Last year, as you saw, put forward a resolution on Tesla and General Motors, which we supported. And DSM is on the agenda, on the AGM agenda in 2025 as well. And as you saw, we'll again refile the Tesla and General Motors resolutions, where they're asking the firms to implement a sourcing policy that excludes deep sea minings from its supply chain. And then finally, we're engaging with policymakers. Here you can see my CEO in front of the Norwegian Parliament. It's a real close issue to us in Norway. Right after this hearing, the Norwegian government gave green light to open up the Norwegian continental shelf for mining. And as one of the first countries in the world. And what was interesting in this hearing is that the industry itself, it asked the government for economic incentives in order to proceed with deep sea mining activities, which really underlines François' point that it's also not economically sustainable activity. And then we have also been engaging with our peers, investors under Finance for Biodiversity. You can see that on the very right on the bottom here. Ahead of the ISA meeting in 2023, where there was a potential to grant commercial authorization for the first time, we also issued a joint statement, investor statement, and called on governments to protect the deep sea. And fortunately, they didn't grant any permissions, but the negotiations are continuing, and I think they have been ongoing for almost 30 years now. So I'll just stop here. I know I am short on time, but feel free to put any questions in the chat and also to send any questions per email if you have. Thank you.
Thank you so much. Thank you, Emine. That was actually very helpful. Thank you so much. And as well, thank you to Andy. We've been actually very good despite the IT issue, for which I would like to apologize again, which means we have now 4 minutes to respond to additional questions if there are more. I can see that we've both answered a few in the chat already. I can maybe Andy and also you, Emine, if you don't mind, because you're based in Norway, I can see there was one question about what's happening in Norway related to deep sea mining. Does any of you want to expand a little bit more? Maybe actually Emine, because you're based there, and if that's okay.
Yeah, sorry, for some strange reason I can't see the questions in the chat, but so the Norwegian government opened up the Norwegian continental shelf for mining activities. I think it was 2 years ago, and it has been very controversial, both in Norway, but also the reputational risk of Norway abroad, because the government and the prime minister is also leading the ocean, the UN ocean work. So the Norwegian governmental agencies, the government's own environmental agencies, they also highlighted that they're against this and they don't think there is enough knowledge, and they haven't done adequately an environmental impact assessment. So there's much that we don't know. They opened up without us knowing. And the government, they're also underlining that this is information that could come from private sector, which we are very critical to, because the information needs to be unbiased. So for these reasons, WWF sued the government. And a few weeks ago, it was announced that they lost in court and they will appeal. So there's also the litigation risk that we're talking about here. We don't know which direction this will go, if this is legal or not. So we're just waiting for the the continuation. I don't know if Andy wants to add more to the Norwegian story.
No, don't worry. Thank you. That's very helpful, Emine. But maybe trying to link it to another questions that just came up, which is which other countries are supporting deep sea mining? And I think that it's a fair one. Where except Norway, it's probably fair to say that Japan is having a rather pro attitude. That's in terms of national waters. I would say those are the key ones. But feel free to add any if you want to add more. And then, of course, there are different countries within the ISA. So looking at international waters, some countries have more of a pro DSM than others. I think that the list would be a little bit long to mention, although it's probably shorter than the list of countries that have already pushed for a moratorium. I think we are now at 32, Andy. It's hard to keep track. The countries that are against, yeah, 32. So that's what I would say here. There was a question that I think we could dedicate a few hours on that, but we have 1 minute, so it's one for you, Andy. Could you want to expand on the alternative to deep sea mining? I think that's a question we hear all the time, and I liked what you talked about, moving towards military purposes and that being a key need. But can you expand on that perhaps?
Yeah, absolutely. Again, very difficult in 1 minute because it could do half an hour just on this anyway. But I think the key question is, at the moment, we are mostly have estimates as to the amounts of materials that are going to be needed. I think they are generally going to be larger. But again, you've got to look at the particular individual minerals. And I think, as you mentioned, at the moment, some of the key minerals that are likely to come from deep sea mining, which at the main areas they're looking at the moment are cobalt, nickel, and to an extent manganese as well. Mostly those prices are down at the moment, and there is overproduction. Even in the long term, it's not sure. And again, a lot of the arguments that are being done around deep sea mining are linked to the energy transition, but it's just not clear how much of those minerals are going to be required for the energy transition. There was a question about the United States, and Trump's policy. Obviously, some of Trump's policy at the moment is likely to actually reduce the amount of batteries, electric vehicles, etc. So there's a huge amount of unknowns. But within that, it's just to remember that it's not just for the energy transition. At the moment, a lot of the arguments of deep sea miners are pivoting towards security issues, towards military issues. And, as I wrote, I think that's kind of very problematic if you're talking about minerals from the areas, international waters, because this should be done for the benefit of humankind. And clearly, metals and minerals isn't that.
Yeah. Well, unfortunately, we're already at time, but I would like to thank you all for your questions. In terms of more alternatives, alternative to deep sea mining, we're happy to have another chat if needed. And let me thank Emine, Isciel once again for your participation. That was very, very helpful. And if any financial institutions have any questions about how to engage on deep sea mining, feel free to get in touch with Emine. I hope that's okay to say. And Andy Whitmore, thank you again Andy. Thank you for your questions and your comments as well. And that's it. We will leave it here. Thank you again. Bye-bye.